Okay, so imagine this. You're planning a big European vacation, and suddenly the euro, oh, it's worth less than the dollar.
Less than a dollar.
Crazy, right? I mean, especially with how strong the euro has been
Yeah,
lately.
it's been on a tear.
But one major bank, ABN AMRO,
They're a Dutch bank, by the way.
right, they're predicting exactly that.
The euro falling below the dollar. I mean,
Yeah, like way below.
2.98 by the end of the year,
0.98.
which is a huge difference from what most analysts are saying, like 1.05.
Yeah, that's a big gap.
So we got to ask, what's ABN AMRO seeing that everyone else is missing?
Yeah, why are they going against the grain like this? So let's dive into that.
Yeah, let's deep dive into this prediction.
Exactly, and figure out what's going on.
So first things first, the euro has actually been climbing. Earlier this year, it even hit 1.0528.
Wow.
And a lot of that has to do with worries about the U.S. economy potentially slowing down.
Right, all the trade tensions and, some of the policies coming out.
Exactly. And all that leads to people thinking, well, maybe the Federal Reserve,
The U.S. Central Bank.
right, they might cut interest rates to try and boost things up.
Which would usually weaken the dollar, right?
Typically.
So why is ABN AMRO thinking differently? I mean, are they seeing something everyone else isn't?
Well, they're basically saying don't assume those rate cuts are a sure thing.
Oh, interesting.
They're pointing out that disinflation has stalled, meaning prices are still rising but not slowing down as much as the Fed wants.
So the Fed is trying to control inflation.
Yeah, their goal is around 2% inflation.
But it's not dropping fast enough.
Right, and that makes it less likely they'll cut rates.
Because cutting rates could actually make inflation worse.
Exactly. They might even need to keep rates higher.
So it's like they're trying to tap the brakes, but the car isn't slowing down as quickly as they'd like.
Yeah, that's a good analogy.
So then on top of that, ABN AMRO is talking about these upside risks to inflation,
Right, like those tariffs on imported goods.
which could make prices go up even more.
Exactly, and that makes rate cuts even less likely.
Wow. So they're calling keeping rates steady the prudent approach.
They are.
So hold on. If the Fed doesn't cut rates like everyone's expecting and actually keeps them high, wouldn't that make the dollar stronger?
That's exactly what ABN AMRO is thinking.
Ah, I see.
Higher interest rates in the U.S. would attract foreign investment because investors can get a better return.
Makes sense.
And that means higher demand for the dollar, which makes it more valuable compared to other currencies like the euro.
So it all comes back to that.
It does.
But, okay, so for the average person who isn't, of a financial expert,
Right.
why should we care if the euro weakens against the dollar? Like, what does it actually mean for us?
Well, think about it this way. Let's say you've been saving up for that dream trip to Paris.
Ooh, Paris.
And now your dollars don't buy as much over there.
Oh.
Everything from hotels to, that croissant and coffee you want in the morning.
Yeah.
It'll all be more expensive for Americans.
So our trips just got pricier.
Basically.
That's not so...
But on the flip side, it could be good news for American businesses selling stuff in Europe.
How so?
Their products would become more competitive because they'd be relatively cheaper. So it's kind of a mixed bag depending on your perspective.
It is.
And for global investors, well, a changing euro-dollar rate can mean big shifts in their strategies.
Yeah, they got to stay ahead of the curve.
They do.
It's amazing how much one currency change can impact the whole world.
The ripple effect is huge.
But okay, so ABN AMRO is painting a kind of gloomy short-term picture for the euro.
Yeah, for the near future at least.
But they also mentioned a long-term opportunity.
They did.
What do they mean by that?
Well, they're actually quite optimistic about the euro in the long run.
Really?
Yeah, their thinking is if the euro drops below the dollar and things stay relatively stable economically.
Meaning like no recessions or crazy global event?
Yeah, exactly. Then that could actually be a good time to invest in the euro.
So kind of a buy low, sell high situation.
You got it.
But that depends on a stable economy, right?
Right? Things like moderate inflation, steady growth, and no big political or financial shocks.
So basically no major drama.
Exactly.
So to sum it up, ABN AMRO is making a pretty bold prediction that goes against what a lot of other experts are saying.
They are.
But it's a good reminder that even in finance, where things can seem very, black and white,
Yeah.
there are always different interpretations and perspectives.
Absolutely. What seems like a sure thing one day could turn out totally different.
Like this whole euro-dollar situation,
Exactly.
it really shows how important it is to stay informed, consider different viewpoints, and even question your own assumptions.
Couldn't agree more.
So as we go about our day, think about this. What other factors could affect the euro-dollar exchange rate beyond what we've talked about?
It's a complex issue.
And how might this forecast, whether you agree with it or not, affect your own finances or even your next vacation.
Plenty to think about.
Definitely food for thought.
Definitely.
Thanks for joining me on this deep dive.
It's been a pleasure.
We'll see you next time.
See you then.
Bye.